Now the US economy, as a result of the inflation, has got to go into contractionary policies with sharp increase in interest rates, etc. And that sort of growth is being cut off. So US imports have been falling during the last months, and China's external exports have therefore been affected. So China received a powerful boost from exports, but that is now waning. China's going to have to depend upon domestic growth this year. If you look at the investment situation from the point of the state is rather satisfactory. It's about 10% year on year growth. But the private sector investment is really rather low, only around about 1%, and definitely needs to be a recovery in that. And therefore, that's the first element. And that's key from the point of view of long-term growth, because over the long term, any investment in the economy will allow it to grow. Then in the third things in the short term, you certainly need a consumer stimulus, because the effect of the COVID pandemic meant that people held back from going out, they held back from going to the shops, they held back from traveling. And that largely explains the fall in retail sales, which has already been referred to during November. But that can be turned around quite quickly. There are effective policies, which well-known policies. You can have tax cuts, you can have special incentives, you can issue money to people, you can have consumer vouchers. They're all very well-known ways for that. So in the short term, you need a consumer stimulus. You then need a longer-term investment, particularly which is aimed at aiding the situation in the private sector while continuing the state infrastructure investment. And then the economy's got to be rebalanced from export growth towards domestic-driven growth, because the world economy is going to be rather weak during 2023.